this video, we're going to discuss retirement planning, another very critical element of a strong and comprehensive life and financial plan. Retirement planning is critical to most individuals. It really has to do with their expectation for when their life may change from working and accumulating money to being able to relax and utilize the money that they've saved. So trying to find ways to assure that they'll have a successful retirement phase of their life and putting together a plan that will help them to do that. We do like to look at it as a balance though, because I think while you're working, if you're living and focusing almost entirely on retirement, you're focused and looking too strongly at just that phase of your life. Whereas if you're working and accumulating funds, but not really focusing responsibly on what your situation will be in retirement or in the future when you're ready to be done working, then you're maybe too focused and too balanced on today and not thinking enough about the future. So trying to balance those two things and look at it more as a change of life. A lot of folks may think, I'm never going to retire or I'm going to work all my life. But I think establishing an objective for wanting to be able to change your mode and be able to work less and relax more and do more of the things that you want to do throughout your life, trying to focus on how you can achieve that and building a plan that will make that attainable. So as you're putting together a retirement plan, one of the things you need is a vehicle to invest your money into to build and accumulate funds for retirement use. And some of the more common and traditional vehicles are doing it through work, using 401ks or 403bs, whatever your employer or your self-employed business may be able to offer. So that's a critical component to investment account options for retirement planning. There are also personal type of retirement plans, IRAs, which are individual retirement accounts. They could be in the traditional form or in the more recently developed Roth IRA form. They're a personal segment of retirement account options that are separate generally from the options that your employer or your self-employed business might offer to you. You can also oftentimes use annuity or insurance products to develop investment account components for your retirement plan. While insurance and annuities don't oftentimes come up as the first selection option for retirement accounts, depending upon your utilization of other retirement account options, they can fit into a potential retirement account plan as investment account options to build upon for retirement. Some insurance products will offer not only a benefit associated with a particular life event, such as life insurance or disability insurance, insurance products that are focused on providing a benefit if something happens to you. Oftentimes, insurance products will integrate or incorporate the potential for saving through that insurance product. So a whole life type insurance policy or a universal life policy or some annuity type product may incorporate the ability to save money and to grow money, particularly for the utilization in retirement years or down the road for some particular purpose. And while sometimes there's costs inherent in those options and different factors that might make those options not as applicable to a particular individual as a 401k or an IRA might be, depending on your own particular needs, if you're utilizing or already maximizing the benefits available to you with a employer 401k plan or a personal IRA plan, you may want to consider the insurance or annuity products that can add to your retirement savings or supplement some of those other strategies that you already have in place. Generally, the retirement account options that you're utilizing will incorporate deferred taxation, meaning that you're saving money in an account, you're growing that account, and it's accumulating income and investment returns, but you're not paying income tax on that accumulation or those income amounts throughout your saving years. And the deferred nature of those taxes are that when you utilize those funds and start distributing from those accounts during your retirement years, then you would pay the tax on those investment income growth amounts. Sometimes a retirement account will not be deferred tax in nature, and it will be more that you're utilizing money you've already paid tax on One of the examples of an account like that is a Roth IRA account, where you're utilizing after-tax money that you've already paid tax on, and the growth in those types of accounts are not tax-deferred, but they're tax-free in that when you utilize those funds, you won't have to pay tax on them. So there's different elements or components of the type of taxation associated with retirement account options. Some are tax-deferred, some are simply utilization of after-tax money and therefore tax-free when you're taking the money out. A very regular consideration for retirement planning is to utilize tax-deferred traditional IRA, traditional 401k options, as opposed to utilizing the newer Roth type option. And you can choose to pay the tax up front on your retirement savings and accumulate the growth of that retirement account tax-free, but there's several variables and considerations that are associated with that decision, including what is your tax rate today, what will your tax rate be in retirement, and also some unknown or uncontrollable variables such as whether laws or policies will change that would affect the type of taxation that you might realize on a particular account that could be different than what your expectations are today. So you're really examining all of the potential variables associated with retirement savings and the tax implications of those retirement savings, and trying to utilize all of the different features available from those different products. And so it may be that you utilize a traditional IRA and a Roth IRA simultaneously in order to gain the benefits that are associated with both, because they both have advantages and benefits. So very critical to putting together a strong retirement plan is someone considering what's important to them, when they might want to retire, what income level requirements they may have during retirement, where they're going to live in retirement, how many houses they're going to have in retirement. So all of the critical elements of future goals and objectives need to be incorporated into a sound retirement plan so that you can begin to make the assessment of what you have as a foundation for starting out with, and what your needs and future requirements will be from the retirement plan that you've put together. The long-range objective of a financial plan in terms of money that you want to leave behind for your children or future generations, or assets that you want to assure are left to future generations. Those objectives are critical to the overall financial plan, because as they relate to a retirement plan, you would not necessarily have those funds or those assets available for you to utilize during your own life. So if you're going to incorporate particular objectives of what you want to be sure you're leaving behind for someone else, you have to assure that you're supplementing your overall financial plan with a sound retirement plan that will address your own personal needs during retirement and not be impacted by the fact that you kind of carved out or set aside those assets for someone else. So it's very important we try to get you to consider and contemplate what is important to you with respect to what you want to leave to family or children or generations after you, but also to assure that you're focused on and prioritizing your own personal needs before you focus too heavily and too strongly on what else you want to leave behind, because obviously we consider it most important that you take care of yourself and you make sure you have a life that's fulfilling and that you can be happy with, but incorporating into that those objectives that you may have for other people and other generations. Retirement planning is really applicable to individuals of all ages, in effect. I mean, starting at a kind of a first job perspective. So when someone is entering the workforce and considering either starting a family or just buying their first home, they've in effect entered into the realm of retirement planning, because they have to at least start to contemplate what they can set aside or what they can afford to put aside for their retirement years. As we talked about, with an objective of wanting to be able to, at some phase of life, work less and relax more, those objectives are likely to be met more successfully the sooner that you start addressing those. But then obviously as you grow, as your family grows, or as you grow older, or as you get closer and closer to the retirement stage of your life, the retirement planning becomes more and more critical, of course, but there really is the full extent of someone's work life that they need to be focused in some way or another on the retirement planning component of their financial plan. As you're going through the phases of life and work and family and heading towards retirement, it's very critical to monitor your retirement plan, to reassess it, to assure that the objectives that you utilize to establish your retirement plan initially remain consistent. But as phases change, as timelines go by, as your life evolves, you need to reassess and possibly modify the retirement plan to remain consistent with those objectives and those timelines. For example, the risk level that you're taking in your retirement investment portfolio will change as you get older, as you get closer to retirement. And that would be an example of reassessing and monitoring so that you're sure that you've established the proper risk level of your portfolio as it relates to where you are in your retirement planning journey. One of the more beneficial results of working with our clients on retirement planning is the production of a model that kind of outlines what their future retirement years will look like. If we start with the foundation that we have and we make assessments of what they can continue to save throughout their lifetime and make some assumptions about what the investment returns will be on those savings, we could start to take a look at what their future years would look like and what retirement years would look like. And using a model like that helps to give some level of assurance to an individual about what their potential to be able to retire at different ages may be. And it also helps them to make decisions throughout their life about critical financial issues with the awareness and with the information that could come from a model like that. They can utilize that information to make decisions about important financial issues as they proceed through life. We're working with our clients. We try to focus on the need to examine all of the important aspects of their life, and so they need to be concerned with today and what their financial issues are today, and also be looking out to the future to assess what their financial needs will be down the road, whether it relates to college planning or retirement planning, but to balance those concerns and make it so that they're not so consumed or focused on just today and ignoring what their future needs may be, or vice versa, where someone might be living significantly or almost fully for the future and not considering what their current needs are today, or making sure that they're living reasonably and happily today as well. So it's a balance between what your needs are now and what your needs may be in the future, and responsibly addressing them both at the same time. One of the very important elements of financial planning for many individuals and families is planning for college, trying to find ways to address the needs of their children in the future to be able to pay for college, and all of the critical variables that are associated with that, tax planning and saving planning relative to college. So we will be addressing the many aspects of college planning and trying to assure that you are considering and focused on all of those key areas.